If you've been following Hedera Hashgraph and its native token HBAR, you know it's one of those projects that doesn't always get the loud headlines like Bitcoin, Ethereum, or even Solana. But beneath the surface, a lot has been happening. And in 2025, it feels like Hedera is standing right at the edge of a potential breakout moment. The question is, what exactly could push HBAR into the spotlight and drive its price higher? First, let's be real about where things stand right now. HBAR has had its share of ups and downs. Like many altcoins, it rode the highs of the 2021 bull market, then fell hard during the bear market that followed. Even in 2023 and 2024, when other tokens were grabbing headlines with big gains or hyped-up narratives, HBAR seemed to quietly grind away in the background. Some saw this as underperformance, but others, especially those who pay attention to Hedera's enterprise partnerships, saw it as a sign that the network was building steadily for the long term. What sets Hedera apart, and what could play into its future price action, is that it doesn't try to be just another blockchain. In fact, it's not technically a blockchain at all. Its consensus mechanism, the Hashgraph, is designed to deliver speed, scalability, and fairness in ways traditional blockchains struggle with. This isn't just tech jargon. For real-world users, it means fast finality, low fees, and the kind of performance big enterprises expect. And that's the niche Hedera has been carving out, being the network that serious organizations, from banks to logistics firms to governments, can actually use. By 2025, this groundwork is finally starting to look like it could pay off. You've got enterprises testing tokenization projects on Hedera. You've got NGOs and climate-focused groups using its network for carbon credits. You've got CBDC experiments pointing in its direction. And through all of this, HBAR is the fuel that makes the network run. It's the token used for transaction fees, for staking, and for governance, meaning that if adoption ramps up, demand for HBAR has a natural pathway to rise. But here's the catch. Adoption alone doesn't always equal price growth in the short term. Investors know this. A project can have amazing tech and world-class partners, but if there's no liquidity, no hype, or no compelling narrative, the token price can stay stuck. That's why the conversation around HBAR in 2025 is shifting to catalysts, the specific events, partnerships, or market shifts that could wake up the wider crypto market to Hedera's potential. We're going to dig into those catalysts one by one. From enterprise adoption to government-backed initiatives, from tokenization to ESG narratives, we'll break down what could finally make HBAR move and what might still hold it back. Because let's be honest, for all the tech in the world, crypto is still driven by stories, momentum, and big moments. And HBAR might just be waiting for its turn in the spotlight. When we talk about HBAR and its future, enterprise adoption is the elephant in the room. This has always been Hedera's North Star, the promise that big organizations, the ones that deal with millions of users and billions of dollars in transactions, would one day rely on Hedera's Hashgraph technology to power their systems. That's not just marketing hype. From the very beginning, Hedera structured itself differently from other crypto projects to make this vision real. Think about it. While most crypto networks started with anonymous developers, Discord communities, and grassroots hype, Hedera built a governing council made up of Fortune 500 companies, global institutions, and well-known organizations. Names like Google, IBM, Boeing, Standard Bank, Dell, and LG have all sat on Hedera's council. That's not the kind of roster you see in your average crypto project. And the council isn't just symbolic. These members actually run nodes on the network, help steer its development, and keep it aligned with enterprise-grade needs. So why does this matter for BAR's price? Because if you're a retail investor wondering what could drive demand, it's these enterprise-level partnerships and integrations that can move the needle. Let's break this down into a few key areas. First, tokenization. This is one of the hottest topics in crypto right now, and Hedera is well positioned for it. Tokenization means taking real-world assets like real estate, bonds, carbon credits, or even fine art, and representing them digitally on a network. We've already seen experiments from major players like BlackRock and Franklin Templeton in this area, and Hedera has quietly become a go-to network for some early tokenization projects. The low fees and quick settlement times make it ideal. If tokenization really does go mainstream in 2025 and beyond, HBAR stands to benefit as the gas that powers those transactions. Second, sustainability, and ESG, environmental, social, and governance initiatives. Hedera has branded itself as one of the greenest distributed ledgers out there. Its consensus mechanism is energy efficient compared to proof-of-work systems like Bitcoin. This has already attracted attention from organizations running carbon credit markets and climate data projects. Imagine if Hedera becomes the backbone for global carbon accounting or sustainability tokenization. That would create a steady stream of demand for the network and, by extension, for HBAR. Third, finance and payments. Let's not forget that Hedera is not just about niche enterprise experiments. It's also a serious contender in the payment space. With settlement times measured in seconds and transaction costs so low they barely register, Hedera is a natural fit for micropayments, remittances, and even central bank digital currencies, CBDCs. We've already seen pilot projects in this direction. If a major bank or government chooses Hedera for a live deployment, that's the kind of headline that could light a fire under BAR's price. Now, you might be wondering, if Hedera has all these advantages, why hasn't HBAR already exploded? And that's a fair question. The reality is enterprise adoption moves slowly. Big companies don't flip a switch overnight and roll out a new technology to millions of users. They test, they pilot, they work through regulatory issues, and they only go live when they're sure the tech is reliable and secure. That's why Hedera's story has always been more of a marathon than a sprint. But in 2025, we're starting to see signs that the marathon is turning into a sprint. More enterprises are talking openly about their blockchain and DLT strategies. Tokenization is no longer just an experiment. It's becoming part of how traditional finance operates. Regulators in the US, Europe, and Asia are giving clearer guidance on digital assets. And through all of this, Hedera has kept its reputation as a stable, enterprise-ready platform. Let me give you a concrete example. Supply chain management. This is a space where Hedera shines. Companies need to track goods across borders, verify authenticity, and share data securely with multiple parties. Traditional systems struggle with this because they're siloed and inefficient. Hedera's Hashgraph provides the transparency, speed, and cost-effectiveness needed to make these supply chains more efficient. And here's the kicker: if these systems run on Hedera, every transaction involves HBAR in some way. Multiply that across thousands of companies and millions of shipments, and suddenly you've got real transactional volume that could push up demand for the token. Another example is digital identity. This is becoming a huge issue globally as more services move online. Hedera's council members and partners have been working on identity solutions that give users control over their data while still complying with regulations. Again, HBAR plays a role in the mechanics of these systems. Here's something else to think about. Hedera has a built-in moat because of its governance model. Having major corporations and institutions as node operators reduces the risk of network manipulation and reassures enterprises that the system won't be hijacked by a small group of actors. That's appealing for businesses that might be hesitant about relying on open, anonymous blockchain systems. For investors, that governance model is a signal that Hedera is in this for the long haul, not just the speculative cycles. Of course, the flip side is that retail investors sometimes see Hedera as too corporate or not decentralized enough. And that has probably held HBAR back in the hype-driven retail markets of crypto. But ask yourself this: when the next wave of adoption comes, do you think governments, banks, and enterprises will care more about hype or about reliability? That's where Hedera has been quietly building its edge. So where does all of this leave us? Enterprise adoption isn't a quick catalyst like a meme coin tweet from Elon Musk. It's slower, steadier, and sometimes frustrating to watch. But when it clicks, when a major enterprise launches a live product on Hedera, or when tokenization of a trillion-dollar asset class picks up steam, the impact on BAR's demand could be massive. That's why, for many long-term believers, HBAR is less of a speculative gamble and more of a conviction play. In the end, enterprise adoption is the story that could turn HBAR from an overlooked token into one of the strongest performers of this cycle. It might not happen overnight, but if you're watching the signs in 2025, it feels like we're closer than ever to that inflection point. When we're talking about what could push HBAR into the spotlight, government and institutional adoption is right at the top of the list. Because let's face it, When retail investors jump into a project, the impact can be dramatic but often short-lived. Prices spike, then come back down just as quickly. But when governments or large institutions adopt a technology, when they bake it into infrastructure, regulations, and financial systems, that creates staying power, creates trust, and it creates the kind of long-term demand that tokens like HBAR need. So let's break this down. What does government and institutional adoption actually look like for Hedera? The first big one is central bank digital currencies, or CBDCs. Every major economy is at least studying them right now, and some are already piloting them. For a CBDC to work, it needs to be fast, secure, and cheap to operate. It needs to handle thousands of transactions per second with near-instant finality, and it has to do this at scale without breaking. Sound familiar? That's exactly the kind of environment Hedera was built for. We've already seen hints of this in smaller projects where Hedera has been used to test digital currency and payments infrastructure. Nothing fully mainstream yet, but here's the key. Governments tend to move slowly, but when they move big. If just one mid-sized country decides to roll out a CBDC on Hedera, or even a pilot with millions of users, the impact on HBAR demand could be enormous. Suddenly, you don't just have speculation driving the price, you have real-world usage at the government level. And it's not just CBDCs. Think about identity systems. Governments around the world are trying to figure out how to handle digital identity, how to let citizens verify themselves online without relying on giant tech monopolies or insecure systems. Hedera's architecture, with its combination of speed, security, and governance, is a natural fit for this. We've already seen pilot projects around identity management on Hedera, often with NGO or institutional backing. If even a small government rolled out a digital ID system on Hedera, that could set a precedent and attract others. Then there's the institutional side: banks, asset managers, and global organizations. Tokenization is once again the big story here. Institutions don't want to just experiment with DeFi projects on random chains. They want networks that feel stable, professional, and compliant. That's where Hedera shines. Its governing council, which includes household name companies, signals to institutions that this isn't a fly-by-night operation. And in 2025, when regulation is tightening, that reassurance is a competitive edge. Let's zoom in on one area where institutions and Hedera are already meeting: sustainability. ESG has gone from being a buzzword to a serious requirement for companies around the world. Regulators in Europe and elsewhere are requiring corporations to track their environmental impact, their carbon emissions, and their sustainability commitments in detail. Hedera has become a hub for carbon credit tokenization and environmental impact tracking. Organizations like the HBAR Foundation's Sustainable Impact Fund are actively supporting projects in this space. This isn't just a feel-good narrative. It's a compliance issue for global companies, and Hedera is positioning itself as the solution. Now let's talk about institutions like NGOs and international agencies. We've seen the United Nations use Hedera for certain projects, including tracking climate initiatives. We've seen NGOs use it to move funds quickly and transparently to people in need. These may not sound like massive market movers compared to, say, BlackRock tokenizing billions of dollars in assets, but they create trust. They show that Hedera can handle sensitive, real-world use cases, and that reputation feeds back into institutional adoption. Another key angle here is compliance and regulation. A lot of crypto projects struggle to explain how they fit into regulatory frameworks. Hedera, on the other hand, has leaned into compliance from the start. Its permission governance model, its known council members, and its energy efficiency all align with what regulators are asking for. That's why joining conversations like the ERC 3643 Association, which focuses on compliant tokenized assets, matters. It puts Hedera in the room where regulations are being shaped. And once institutions see that Hedera has regulatory alignment, they're far more likely to adopt it. But let's not gloss over the challenges. Government and institutional adoption doesn't happen quickly. We're talking about years of testing, lobbying, and pilot programs. And crypto investors, who often want quick gains, can get impatient. That's one of the reasons HBAR hasn't seen the same speculative hype as other tokens. But here's the flip side. When the adoption finally lands, it's stickier. If a government adopts Hedera for digital identity, it's not going to abandon it in 6 months because of a new meme coin trend. That kind of adoption builds a foundation that can carry HBAR through multiple cycles. Think about it like this: if a big retail trend is like a sugar rush, then government and institutional adoption is like planting a tree. It takes longer to see the results, but once it grows, it's not going anywhere. And right now, Hedera is planting a lot of those trees. So what could be the spark in 2025? It might be a CBDC pilot that scales faster than expected. It might be a major financial institution tokenizing billions in assets on Hedera. It might be a government agency adopting Hedera for ESG reporting or digital identity. Any one of those could be the headline that finally wakes up the broader market to what Hedera has been quietly building. And when that happens, HBAR demand doesn't just creep up, it accelerates. Because governments and institutions don't play small. They bring scale, trust, and legitimacy. And for HBAR, that could be the difference between being an overlooked altcoin and being recognized as one of the key networks driving the digital economy forward. Now let's switch gears for a moment. We've talked about enterprises, institutions, and governments, all the slow-moving but powerful forces that could shape BAR's future. But there's another side to the story, and it's one we can't ignore: the retail market. Because let's be honest, no matter how good the tech is or how strong the partnerships are, crypto prices in the short term are still heavily influenced by narrative, speculation, and community-driven momentum. Retail investors want a story they can believe in, something simple and compelling they can rally around. For Hedera, that story hasn't always been easy to sell. Unlike meme coins or flashy DeFi projects, Hedera's pitch has been more technical and enterprise-focused. But in 2025, the opportunity is there to reshape the retail narrative and finally get HBAR into the conversations happening on X, Reddit, and TikTok. Here's where it gets interesting. Retail markets don't always need hard data or enterprise case studies to jump in. What they respond to are headlines, catalysts, and momentum. Imagine this: news breaks that a mid-sized country has launched a CBDC pilot on Hedera. Or a Fortune 100 company announces they're tokenizing billions in assets using Hedera's network. Those kinds of headlines don't just catch the attention of institutions. They ripple through retail spaces and suddenly make HBAR the coin of the moment. And let's be real, once retail interest kicks in, FOMO does the rest. We've seen it before with countless tokens. All it takes is one breakout narrative and a wave of influencers, YouTubers, and Twitter analysts hyping the potential, and suddenly BAR's price chart starts looking explosive. The fundamentals matter in the long run, but retail is about perception, and perception can change overnight. There's also a cultural side here. Crypto communities thrive on identity and belonging. Hedera's community has always been smaller compared to giants like Ethereum or XRP, but it's loyal. What retail momentum needs is fuel. Whether that's a killer dApp launching on Hedera, a viral use case in gaming or micropayments, or a big partnership announcement. Once that spark is there, the community can amplify it into something much bigger. Of course, retail-driven price action cuts both ways. Just as it can send prices skyrocketing, it can also lead to sharp corrections once the hype cools off. That's why the real magic happens when retail momentum meets institutional and enterprise adoption. If Hedera can line up both, strong fundamentals from partnerships and exciting narratives that grab retail attention, then BAR's upside potential becomes much more sustainable. At the end of the day, retail speculation is part of the game. It may not be the foundation Hedera is building on, but it can be the fuel that sends HBAR into the spotlight when the right catalyst arrives. And in this market, sometimes that's exactly what's needed to kickstart the next big move. So, where does that leave us with HBAR in 2025? We've walked through the key drivers: enterprise adoption, government and institutional catalysts, and retail speculation. Each one plays a different role, and together they paint a picture of a token that's been quietly laying the groundwork for years. Maybe longer than most investors have the patience for, but one that could finally be ready to step into the spotlight. Enterprise adoption gives Hedera its backbone. It's the long-term story of tokenization, supply chains, payments, and sustainability projects building on a network designed for reliability and speed. Governments and institutions add the credibility, the scale, and the staying power that only comes when big players make Hedera part of their infrastructure. And retail? That's the accelerant, the hype machine that can take a slow, steady climb and turn it into a parabolic run. What makes HBAR interesting right now is that all three of these forces seem to be converging. Tokenization is no longer just theory. It's moving into practice. Governments are seriously testing digital currencies and digital identity. ESG requirements are pushing corporations to adopt greener, more transparent systems. And retail investors, who may have overlooked Hedera in past cycles, are starting to pay attention again as the headlines pile up. Of course, none of this is guaranteed. Hedera still has challenges. Its enterprise-first approach can feel too slow for retail markets, and it hasn't always been the loudest voice in the crypto space. But maybe that's the point. While other projects chased hype, Hedera kept building. And now, in 2025, the market may finally be ready to reward that patience. So, how high can HBAR go? That depends on which catalysts hit and when. A major CBDC pilot? That could put HBAR on the map overnight. Tokenization of billions in real-world assets. That's a multi-year growth story. Retail hype from influencers catching on. That could add fuel in the short term. The key is that all these pathways point to the same thing. Upward potential backed by real adoption. Here's my take. If you're watching crypto this year, don't sleep on Hedera. It might not shout the loudest, but sometimes the quietest builders end up making the biggest impact. And if you've enjoyed this breakdown, make sure you hit that subscribe button on the channel. We're going to keep unpacking not just the hype, but the fundamentals that could shape the future of the digital economy. Leave a comment down below. Do you think HBAR is finally ready to break out? Or are we still too early? I'd love to hear your thoughts. And if you found this valuable, share it with a friend who needs to know what's happening under the surface in crypto. Because remember, the market rewards those who pay attention before everyone else does. And HBAR just might be one of those stories.